Number one, the reduction of the special defense tax from 17% to 5%, the abolition of the deemed dividend distribution. Number three, the unfortunate increase of corporation tax from 12.5% to 15%. Number four, the abolition, of course, of the stamp duty on all contracts, the extension of the non-dom tax status for another 10 years. Number seven, tax-free salaries. Another main tax reform is for all the people who own property, of course. Another great tax incentive, of course, is the crypto tax. Cyprus has introduced a flat rate of 8%. All rental income should be collected by electronic means. 2026 tax reform empowers the commissioner, the income tax officers, to have superpowers in order to collect taxes up to the closure of a business. Welcome everyone to the 2026 Tax Reform Podcast, brought to you by FinHub, the #1 marketplace here in Cyprus for professional services such as legal, audit, accounting, and of course, immigration. FinHub connects you to vetted experts who provide services to individuals and businesses in Cyprus and all over the world. Now, let's dive in today's topic, which is no other than the anticipated 2026 tax reform. We will start by summarizing the most important changes that are taking place currently in this year, in 2026, and of course we will compare them to what was applicable before 2026. Let's analyze the 2026 tax reform in detail. Firstly, let's talk about the corporation tax. As you all may well know, prior to 2026, all companies were subject to 12.5% corporation tax, unless, of course, they had a special tax like the IP status, which entitled them to only 2.5% tax. So this 12.5% now becomes 15%. This applies from 2026 onwards. Any deemed dividends or any dividends that are yet to be obtained and they're based on 2025 or 2024 or previous profits, they will be taxed based on the old tax rates. The income tax examiner has made it clear that there are no loopholes. Whatever will be subject to the new rates will have to be earned. Profits need to be earned from 2026 onwards. So anything that was earned in the past, it will be subject to the previous tax rates. Let's now move on to the dividend tax for all our shareholders. The international shareholders listening to this podcast have nothing to worry about because nothing has changed for them, either because they are non-dom or because they are not living here in Cyprus and they are not tax residents. But for us, the Cypriots or even the internationals who live in Cyprus and they are tax residents of Cyprus and domicile of Cyprus, instead of paying 17% on dividends from 2026, you will only be paying 5%. If you will get dividends from previous year's profits, you will be subject to the previous tax rate of 17% and not 5%. Again, the commissioner made sure that there are no loose ends, no loopholes. The 5% applies only for profits generated in 2026 onwards. And since we're talking about dividends, a very good news for all the Cypriot shareholders or all the international shareholders who are tax residents and domiciled here, the deemed dividend has been waived. And that, of course, applies for 2028 financial statements. So in 2026 and in 2027, you will have the dividends You will have the deemed dividends from 2024 and 2025, but in 2028, this term of deemed dividends gets finally erased from our vocabularies. And guys, this is something that I had hard time explaining to all of our clients, especially the local clients. It's very hard for a business guy, for a businessman to understand what deemed dividend is and how it is calculated. Even corporate lawyers are asking me about this, and I'm always explaining to them what it means because it's tricky and it doesn't, is not easily absorbed by professionals. In any case, good news, deemed dividend is out, so we don't need to worry about this. Let's talk about the 20% capital gains tax when it's triggered when you have a piece of land and you want to exchange that land, or a piece of property which you want to give away to a developer to build something new. In the past, there was a 20% capital gains tax on this transaction. So if your auntie had a piece of land with an old building and wanted to give it to a developer so that she would get in return a flat or two flats, she would have to pay 20% before this was given to the developer. As you all know, developers are very reluctant in paying out cash, so it was never in the deal. It was rarely in this kind of deals. And this is why so many Cypriots are stranded with having immovable properties, or they are wealthy in terms of land or a piece of property which is old and it cannot be used. But because they cannot afford to pay this 20% capital gains tax, they ended up not utilizing this immovable property and living, a normal life or not enjoying their money. Very cleverly and very correctly so, our commissioner and the government have decided to unblock the real estate economy, giving power to all owners of land or immovable property so that they can use without any burden the property they own. So 20% is abolished. If you own a piece of land, a piece of property, and you want to give it to a developer, do so. There's nothing for you to pay. And of course, the economy will start running again in terms of the building industry here in Cyprus, which is quite big. Rents. Rents used to be collected either electronically or by cash. And of course, there was a 3% special defense tax on the 75% of the annual rent. That was one kind of tax that was applicable on rents. And the other type of tax was, of course, if you were receiving this rent as an individual, you were taxed based on your pay as you earn thresholds, or if you were a corporate, based on the 12.5% corporation tax. Now, with the 2026 tax reform, this has changed. Firstly, you are not allowed to collect rent in a cash form. All rents needs to be collected by banking or alternative electronic means. This means that the government and of course the commissioner of the income tax office is trying to tax all rents in the republic, and it makes it very hard for people to have tenants and not declaring their annual rent. Now, the 3% is waived, therefore the landlord or the company who owns the property needs to only pay either income tax or corporate tax at the applicable rates. So these again are very good news. Cyprus is fighting the corruption, is trying to tax all the sources of income that are illegally not displayed, money evasion, and of course it has waived the 3% special defense tax, which should make all the landlords happy. How is the 2026 tax reform affecting the crypto profits? Great news for everyone, great news for Cyprus, great news for the international tax planning. professionals because now Cyprus is becoming a strong leader in the crypto space. With the introduction of the 8% flat tax amongst legal and physical persons, Cyprus is becoming a very attractive jurisdiction for tax planning purposes. So what does this 2026 tax reform entails for cryptos? Number one, it says that crypto profits are taxed at a flat rate of 8%. Number two, it does not allow crypto losses to be carried forward. If you have a portfolio of cryptos and you are winning in some, losing in others, you need to combine that and you will be taxed on the profit of your overall crypto position. So you cannot carry forward any losses and you cannot defer the payment of taxes in any way. Something very important, mining of cryptos is not considered crypto trading, it's considered a normal trading activity, not a normal crypto trading activity, and as a result, it will be taxed from 2026 at 15%. Of course, if you are a non-domicile person and you're mining by a company, your total tax will only be 15%. Another important point for the crypto tax in 2026 onwards. If you are converting one coin to the other, if you have unrealized gains, unrealized losses, all these are taxable activities. Therefore, at the end of each year, be prepared to pay your 8% flat tax rate. In addition, if you were a miner and you were mining cryptos prior to 2026, it is very important to remember that you will be taxed at 12.5% corporation tax, or if you are mining as an individual, you will be taxed based on your personal tax thresholds up to 35%. We're talking about profits and mining income gains, year-end gains of mining activities up to and including 2025. From 2026, the rate will be 15% and not 12.5%. Thank you for watching us. This episode is brought to you by finhub.com.cy, the number one leader and marketplace of professional services where businesses and of course entrepreneurs can obtain binding quotations from vetted service providers which are very reputable here in Cyprus. FinHub introduces the best service providers to its users, and these service providers are of course local and reputable law firms, local and reputable Big 4 or Big 10 audit and assurance firms, and of course very experienced and very reputable immigration firms who are handling the relocation of FinHub's international users who come here and relocate in the Republic. Now let's move on to, of course, the famous non-dom. The non-domicile tax status is extended for another 10 years, which means that in total, an individual who relocates here in Cyprus can be a non-domicile for 27 years. So we had clients who were on their 17th year in 2025, lucky ones. They have the option to remain non-domicile here in Cyprus for another 10 years. How to do that? You pay 250,000 for every 5 years. The details in the logistics will be explained in a different podcast, and of course you can use the service providers on our platform who can direct you either via paid consultation or by hiring them outright. But this is great news because, as you can recall, when someone is a non-domicile but tax resident here in Cyprus, they do not pay any dividend tax, they do not pay any interest tax, and of course they do not pay any tax on their rent, which of course now with the 2026 tax reform, this was waived. So the special defense tax is waived on the rental income. So the non-dom does not pay special defense tax on dividends and of course on their rental income. So of course the non-domicile does not pay special defense tax on dividends, which are entirely tax-free, and on interest, which of course now becomes entirely tax-free. So these are great news for the non-doms. Feel free to inquire more information with our service providers on the platform, and they will be more than happy to assist you. Let's move on to our pensioners. As you know, Cyprus is very popular for pension people who are retiring and they relocate here. They prefer Paphos, I believe. Paphos is number one in terms of pensioners relocation, and number two is Larnaca. Now, for our overseas or local pensioners who are receiving pension from abroad or even local, the tax thresholds have increased from 3,420 to 5,000. It's a big tax-free threshold increase, and of course the overseas pensions are taxed here at 5%. In some cases, a double tax treaty may waive the 5%. Please make sure you speak with your tax experts, and they will be more than happy to assist you and give you the right tax advice so that you can fill in your tax return correctly. For our pensioners who are leaving their current employment and they are receiving an ex gratia bonus, if this ex gratia bonus exceeds the 200,000 euros, it will be subject to tax at 20%. And unfortunately, this also applies for life insurance premium as well as premiums for permanent or partial incapability. So insurance payouts, either for life insurance purposes, for physical or mental incapability, or permanent incapability, are taxed at 20%. So if you are someone who is leaving their job, you are at your 60th year or the 63rd year, and your employer wants to give you an ex gratia bonus because you've served the company very well. If this bonus is less than 200,000, it's going to be tax-free. If it's higher, unfortunately, the amount exceeding the 200,000 will be subject to 20% tax. The same applies if you're someone who is unfortunate and has a permanent disability or a partial incapability at the workspace and will receive an amount from the insurance company. If this amount exceeds 200,000, again, that amount will be subject to 20%. If it's below the 200,000, it will be tax-free, and the same applies for life insurance. This is big, actually, on life insurances because all life insurance premiums were tax-free for so many years. And of course, we see here that the commissioner is trying to close all the loopholes that the Cyprus tax system had. The 2026 tax reform is a very thorough tax reform. The University of Cyprus, amongst together with the Big Four and of course with our regulator, put a lot of effort, and of course the Income Tax Office, to close a lot of loopholes, which personally I disagree, because Cyprus is an international tax center. If you want Cyprus to be included in tax planning solutions, if you want businesses to relocate in Cyprus, you need to have some loopholes, some windows that the businessmen can play with and take advantage of. Otherwise, you will simply not be selected for your tax planning, and these companies will find other competing jurisdictions to do their setups and, of course, establish their premises and businesses. Let's move on to other important points as well affecting the corporates, the companies. Losses carried forward. As you may well know, when a company makes a loss in a year, it could carry it forward up to 5 years to offset future profits. This was a great incentive in the past. We did not used to have any restrictions, so the carried forward of losses was unlimited. Several years ago, they have introduced this 5-year rule, and now with the 2026 tax reform, the 5 years have become 7. We welcome this change, and this simply means that if you have a loss in a certain year, you can use that loss up to 7 future years to offset future gains. And of course, this is very important. We had many clients who were annoyed, many users and many clients who were annoyed with the 5 years law, because if they were unfortunate in a year to incur significant losses and fortunate in the next 4 years or 5 years, it means that they could not take advantage of those huge losses incurred 5 years before. But now the income tax office gives them another 2 years. So the 5 years carried forward becomes 7 years carried forward. Very good change. Welcome it. And thank you for that, because the locals here and of course the international setups will be very pleased with this change. Entertainment expenses cap has increased up to 30,000. Maybe 30,000 is still not enough because everything is so expensive these days. Meals are very expensive. I mean, if you take a household, never mind the business, and you see how much money we all spend on food, it's a shocking amount. So entertainment expenses, taking clients out or doing stuff with your employees, that actually is not allowed. You are only allowed entertainment expenses for business purposes and business introducing purposes. It has increased from 17,000 to 30,000 plus the 2%, I believe, percentage point on the turnover that still is included. But again, something favorable. They have pushed the barrier to 30,000. You never know if businesses make enough noise. Maybe the entertainment allowable expenses will be raised even further, simply because it makes sense. Tax residency of the corporates. When a Cyprus company is now formed, it is implied by Cyprus that it is resident here in Cyprus. So if you are an overseas person who has established a Cyprus company here to trade either on its own or as part of a group, you can assume that here the assumption is that this Cyprus company is tax resident here unless proven otherwise by third parties, usually by overseas authorities who might investigate this Cyprus company. So this is a clear distinction and clear definition in the 2026 tax reform, and a very important one. Some other changes are, of course, that the tax penalties have increased significantly. We're not going to go into details. Some deadlines have changed so that it's more convenient for the accountants and the auditors and the tax experts to do their filings. And of course, there are many other smaller points that are included in the 2026 tax reform. I remind you that the tax reform was 6 different bills that had to be passed by the Cyprus Parliament, very detailed, covering all aspects of each different taxation, whether that was special defense, capital gains, whether that was income tax, and of course whether that was the powers of the commissioner to collect taxes. So we can talk about the 2026 tax reform for hours or even days, but the purpose of this podcast is to brief you with the key parameters. Feel free to inquire and we will connect you with any one of our service provider who is dealing with corporate. We have the biggest corporate law firms as service providers offering corporate services to our users, who are businesses from all over the world. We have Big 4 and Big 10 audit and assurance firm who can advise you on the details of the 2026 tax reform. Now, let's talk a bit about the excessive powers of the Commissioner of the Income Tax. We consider them excessive. I'm going to read you what the bill says, and I'm going to give you my thoughts on this so that everyone is aware of how important this change is for businesses, and actually how important it is for the bad boys primarily, people who are neglecting to pay their taxes, people who are omitting to be prompt with their tax and compliance obligations, whether that is submitting tax returns, closing financial statements, performing audits, submitting all the tax returns, all the audited financial statements, or the abbreviated financial statements to the Cyprus Registrar of Companies. So, allow me to read you the powers or changes that affect the Commissioner of the Income Tax, and be alert that this is very important, and if you're not prompt, you could face up to closure of your own business. Commissioner's powers. The Commissioner, in its effort to collecting taxes, can close companies, and this is how it is enabled to do this with the 2026 tax reform. The Commissioner can suspend the operations of a business and seal its premises where the person operates the business fails to submit at least 2 tax returns or at least 12 monthly withholding tax and contribution returns. So let's take the simple example. If you have failed to submit your 2024 and your 2025 tax returns, the Commissioner has the right to suspend the operations of your business. This is very important. When a person fails to pay the tax calculated or pay a contribution due under the tax return or withholding returns or under the assessments issued by the Commissioner, including penalties, surcharges, etc., when that amount exceeds 20,000 euros. 20,000 may sound a lot for very small micro businesses, but 20,000 of taxes due are nothing for companies with turnover exceeding 1 million. And in Cyprus, we have many companies, mid-sized companies. I'm not talking about the large companies, many mid-sized companies that, of course, their taxes exceed or are close to the threshold of 15 to 30,000 of Cyprus tax, whether that is corporate tax, special defense tax, or if you group them together. So many companies will be exposed, and what if there is a mistake on the assessment? What happens if the computation of the income tax office is wrong? What if the company at the specific period faces some cash flow issues and it intends to pay the 20 or 30,000 in 4 months or in 6 months? In the past, you owed that money, you used to get an 8% penalty, or the penalty depending on the year of the amount. You used to have interest on the total amount of the tax and the penalty, and of course a flat 100 euros or 150 euros of fees. Over and above those, I believe, the Commissioner has the right to seal your company and stop you from trading. I don't think this is a good measure. I think it's an excessive power, and it could be segregated, because 20,000 for a big company is like nothing. And why should a big company be under the radar of the Commissioner if such a small amount is due to any assessment or for any tax? Another wrongdoing would be the issuing of inaccurate invoices or receipts, or failure to issue them. So if you are investigated and the Commissioner sees that your invoices are wrong, or you should have raised invoices and you didn't, this is something that the VAT checks very thoroughly, but now we have the income tax office checking it as well. They can seal your company or suspend the operations of your business. Now, in practice, how practical this is, from experience, you need to undergo an investigation for the Commissioner to come up with these results. But if there is an investigation and you were in the wrongdoing, just bluntly, without issuing a penalty, the Commissioner will stop your operations? For which reason? To penalize you further? How are you going to find the money to pay the penalties if you stop the operations? It could lead to other problems. So I believe these powers needs to be revisited. This is my personal opinion. And I believe this will change in the near future once everyone understands what we mean by giving so much power to the Commissioner. Of course, if a business obstructs the conduct of a tax audit by authorized officers, I don't have a problem with that. Of course, stop the operations, do whatever, because they're trying to hide something, because they're trying to avoid paying taxes. but this is different than having someone who made a mistake and omitted to submit two tax returns, or someone who owes only 20,000 and could be very insignificant for that person's business. Now, in order for the commissioner to make the decision to freeze or suspend the operations of a business, I'm going to read it, will come if the commissioner is sending 3 notifications to the person concerned, usually the management or the address of the company which the income tax office has in its data, via registered letter to the last known correspondent address. So if the commissioner sends 3 letters to the company and the company does not respond, based on what I've explained to you earlier on, it can suspend or close the business. Now, the closing of a business cannot exceed 10 days. This, again, is subject to interpretation. I'm not going to talk about this in detail. So, in a nutshell, what we are saying is that if for some reason the commissioner has the wrong address of the company and sends 3 reminders to a company, it could give instructions to someone to go and close this business because they have failed to pay a penalty, or they have failed to submit 2 consecutive tax returns, or whatever that might be. I think it's a lightweighted decision which has a great impact on someone's making of living, on someone's living, and of course on the operations of a corporation. So, personal opinion, the commissioner's powers needs to be rethought carefully, thoroughly, and of course adjusted accordingly. Now, let's move on to some other important points affecting the salaried people here in Cyprus, whether Cypriots or internationals working for a Cyprus branch or a Cyprus company or an overseas company which is operating here, are subject to the 2026 Salaries Tax Reform. As you all know, the tax brackets have increased, and I'm going to read them to you so that we don't make any mistakes. Up to 22,000 now, everything is tax-free. So if your taxable income is 22,000, you will pay 0% pay as you earn tax. 22,000 is not your gross income. I repeat, it is your taxable income, and you deduct from it the social securities and any life insurances or any insurances that are allowable for deduction. This gives everyone in Cyprus automatically 500 euros of disposable income, simply because 22,000 minus 19,500 multiplied by 20%, that amounts to 500 euros. So the 2026 tax reform gave all the employees an extra 500 euros of disposable income. Now, the thresholds after the 22,000 are the following. 22,000 to 32,000, you will be subject to 20%. 32,000 up to 42,000, you will be subject to 25%. 42,000 up to 72,000, you will be subject to 30%. This is very important, and it's a big break, so the 30% gap is quite wide. And of course, for our high flyers, anything above 72,000 will be subject to 35%. There are some additional allowances which increase the tax-free amount for all employees, and I'm going to read them to you in order to avoid any mistakes. So it's important that you calculate your combined gross income as a family. And there are 3 numbers you need to be aware of. The first number is combined income of 90,000. The other is a combined income of 100,000 when you had 1 or 2 children. And the third, for the additional allowances based on the amount of children that the household has, one needs to take into consideration the combined income. And for the purpose of this podcast, it's a bit complicated to talk you through it, but I'm going to give you 4 numbers that you need to be aware of, okay? And these are the numbers that if your combined income exceeds it, you are not eligible, or if it's below it, you are eligible. So And of course, it depends with the amount of children that you have. So if the family income is 90,000 without any children, or if the family income is 100,000 with 1 or 2 children, or if the combined income is 150,000 when the household has 3 or 4 children, and of course, if the combined income is 200,000 in case the household has, the family, I mean, when I say household, has more than 5 children, or if it's a single father or a single mother, there is no combined income because it's a single person, single parent or mother, which means that if the income is less than 40,000 for one person, then the tax allowance is 1,000 for the first child, 1,250 for the second child, and 1,500 for any additional children. So what we are saying is that if you're a household and your combined income is up to the threshold I've mentioned earlier on, depending on the amount of children you have, you add 1,000 for the first child, plus 1,250 for the second child, plus 1,500 for the third or fourth child, and the total of that amount is deducted from your taxable income. So the first 20% will be taxed after you deduct your children's allowance. And this, of course, applies for children below the age of 24 years old. Additional tax allowances are for the loan interest up to 2,000. So if you bought your property, your house, and you owe money to the bank, the government and the income tax office gives you up to 2,000 tax allowance. Again, this is very important because all these allowances accumulate and they will bring your taxable income significantly low. And we are for these tax allowances for the salaried people because they're very important. Another tax allowance that you might get is if you change your house and you make it more eco-friendly, there is an additional allowance of 1,000. So if you have 2 children, let's say, and you are within the combined income, you're going to get 1,000 plus 1,250. That's 2,250 euros tax allowance. If you pay to the bank interest for your house and that interest is 1,000, you add another 1,000. If you have changed the windows and you have made them with new aluminum, which are eco-friendly, you add another 1,000. So instead of being taxed at the 22,000 threshold, you could be subject to tax after the 27,000 threshold, which is very important because you're saving significant amount of money. So I'm going to provide tables and of course links to this so that there is a calculator by the government so that it's clear for everyone and it's not confusing. But what I want you to take from our podcast is that the 2026 tax reform will give the employee people more money if their agreement with their employer is based on the gross salary. And this is because without having any children or doing anything, they will have 500 euros, the first threshold, disposable, more disposable money. If they have children and they are not high earners, each child corresponds to a tax-free amount. If they have bought their house and they own interest to the bank, they owe the money to the bank, that interest will also give them a tax credit, which also help them financially. And of course, if they have made their renovations in their houses to make them better, eco-friendly, again, they will get extra allowances. This is a bit complex for someone to do without the help of a tax expert. Feel free to ask for 2026 tax return advice on our platform, finhub.com.cy. And of course, our tax experts, the audit and assurance firms we have as paid service providers on the platform will agree a fee with you and they will proceed and prepare the tax calculations on your behalf. Another important tax point that the 2026 tax reform made for landowners is, of course, the lifetime exemption. The commissioner has increased the exemptions on the disposal of your primary residency as follows. From 17,086 to 30,000, which is the general exemption for everyone. But if you're selling an agricultural land, the exemption increases from 25,629 to 50,000 euros. And of course, for your primary residence, if you're going to sell your house for the first time, and these lifetime exemptions, as the title says, you are entitled to them once. So if you're going to sell your house, your lifetime exemption has increased from 85,430 to 150,000. So this is very important, and we need to thank the tax commissioner for this, together with the abolition of the antiparochi 20%. I've talked about earlier on, when you want to dispose your immovable property and give it to a developer to construct something on it, whether this is land or a land with an old building, that 20% was waived. Now, if you're selling your primary residency, you have up to 150,000 tax-free amount. If you're subject to capital gains tax of 500,000 and you're going to sell your house for the first time, you're going to take, and the profit is 500,000, you're going to take 500,000 minus 150,000, then multiplied by the 20%. And of course, this is a saving, it's a 30,000 saving outright. So very important, and of course, very good. I mean, this will help all the households and all the Cypriots, all the local and ordinary people who, for some reason, need to sell their primary residency. Over and above that, you have the general tax, lifetime tax exemption, which used to be 17,086 euros, and now is, of course, 30,000. So again, very important tax allowances for the Cypriots. And this brings us to the closing of this beautiful podcast. We've talked about the 2026 tax reform. This podcast is brought to you by finhub.com.cy, the #1 marketplace in Cyprus, where businesses and service providers get introduced and get help from each other. Businesses can put their inquiry in the platform, asking for legal help, asking for accounting help, asking for immigration help. And on the other hand, the service providers will have access to this information and, of course, get in touch with these businesses and offer their services. FinHub matches the needs of the businesses with service providers, which are, of course, vetted and pre-qualified by the FinHub staff. In summary, in today's podcast, we have talked about the corporation tax increase, the waiving of the deemed dividend tax, the reduction of the dividend tax, the antiparochi waived tax. We've talked about the salaries of all salaried people. We've talked about the income tax office powers which have changed from the past. We've talked about the pensioners' allowances. We've talked about property owners and how they can take advantage of the 2026 tax reform. And of course, we've talked about many other important aspects of the 6 bills that were voted early in January this year. Thank you for watching. Stay tuned, and of course, feel free to use FinHub to find the best lawyers, the best accountants, the best immigration experts in the Republic.